Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 153rd CP program organized by AASB of ICI for this council year. As we all are aware that AASB has taken this initiative to cover all these standards as well as to cover all these sectors for the various key consideration in the audit part. So today we are also considering very important part, that is the service sector. And in order to tackle this very important part, sector, that is the service sector, we are having with us CA Harshvardhan Doshaji from Mumbai. So on behalf of AASB of ICI, I extend my heartiest thanks and welcome to you, Harshvardhanji, for today's webinar. Welcome to you, Harshvardhanji. Chairman sir is traveling, so might be within couple of minutes he will join. So that is why, due to the network issue, he is not able to join. And Honorable Vice Chairman sir is also in one of the meeting, so he is unable to join. So I am taking liberty to start this webinar. And we are having with us two very respected and very learned members from our Chartered Accountant fraternity. C. Ashok ji, very learned and very respected and very senior in our this Chartered Accountant fraternity. So I welcome to you, Ashok ji, in this AASB webinar. I also welcome C. Kulbhushan ji in this AASB webinar. And both are our moderators for today's webinar. Welcome to you, sir. So without wasting much more time, I request today's first moderator, CA Kulbhushan ji, to please start the proceedings of today's webinar. Over to you, Kulbhushan ji, please.
Thank you, Dr. Thank you very much. I welcome all the members for this 153rd. Hello.
Yes, sir. Yes, you're audible, please.
Yeah. I welcome all the members on this 153rd webinar of AASB. On behalf of AASB, I would like to thank each and every member. Please come and join, and Mr. Harshvardhan will enhance our knowledge in the field of audit of service sector. And this financial under the chairmanship of Mr. Sanjeev Singhal, to whom we know as the God of sustainability. It is very fortunate for us to be having a chairman like him in our panel, and I hope he will soon join us. And in between, let's start, and I over to our very learned member Ashok Jainji, who will introduce you with our speaker. And I hope Mr. Speaker Harshvardhan will enhance our knowledge how we should conduct the audit of service sector. Please, over to you, Ashok ji.
Friends, good evening. I have the privilege of introducing CA Harshvardhan Dosa, the guest speaker. Mr. Harshvardhan is a commerce graduate from University of Mumbai with specialization in the field of accounts and finance. He is a chartered accountant and has been in the field of audit for the last 8 years. After completing his articles with C&K and Associates LLP, he continues to be part of the audit and assurance team of the company. He specializes in audits of service industries and foreign MNCs. He handles several large private limited companies and is handling statutory audits of listed companies also. He also has experience in the areas of valuations and due diligences. Mr. Harshvardhan has also been part of training on company audits, audit standards and certifications, as well as held seminars. He has been part of internal team to develop working papers and audit documentation. He has also spoken to CA final students on various subjects, including auditing and assurance. I invite CA Harshvardhan to speak on the subject. Most welcome, Mr. Harshvardhan, please.
Thank you, Ashok ji, for the lovely introduction. Thank you, Kulbhushan ji, also. I mean, whenever I give all the sessions on auditing and assurance standard board and at the institute, it is a great privilege to be here and to be able to give my thoughts on audits of service sector industries. Thank you, AASB, for providing this wonderful opportunity. I think what AASB is doing in terms of holding these sessions week after week. I think 2, 3, 4 sessions sometimes in a week is really commendable, and it is really useful for all of us as members. It many times I just log into the sessions, and even I see some sessions and some other speakers speak as well on certain topics. So it's a really great privilege and honor to be able to hold a session on this particular topic. The topic that we will be discussing today are the key considerations in audit of service sector industries. Now, let us start the particular session. This is just the basic disclaimer in regards to the session. That these are just the views. These are just my views, etc., etc. Apart from that, let us first understand what is going to be today's agenda. First, we will be covering what is the background and what is the impact or what is the position of service sector in India. After we understand what is the service sector in India, then we will move on to the future of service sector in India. Now, what that does is when we understand a particular industry before we actually go ahead and audit it, it gives us a big base based on which we can conduct our audit. One of our most important standards, which we will be covering today also, is SF 315, which talks about identifying and assessing the risk of material misstatement through understanding the entity. And the first stage in understanding the entity is always to understand what framework the entity is in, what is the nature of the business of the entity, and so on. After that, we will understand certain standards on audit in service industry. Of course, all standards on audit are applicable to all types of industries, whether we do service sector, manufacturing, etc. It's just that certain important standards that we can really focus on in service industry, we will have a look at that. After that, we will understand a little bit of what were the common frauds or what were the malpractices that were undertaken in service industries in the past. This helps us automatically highlight areas where, in reality, companies or service industries do their fraud. Whenever they conduct a fraud, what areas do they target, or where are frauds actually conducted? Those areas automatically for us will become highly important areas. Apart from that, we will understand the test of control and substantive procedure for major audit areas in case of a service industry. Now, many of the service industries today in India are subsidiary of foreign companies. Now, when they are subsidiaries of foreign companies, the parent entity is outside India. They have sales transactions with parent entity. They have purchase transactions with parent entities. They have other reimbursement transactions or ESOP transactions with parent entities. So we will also understand certain FEMA compliances with regards to these kind of entities. After that, we will understand a little bit on documentation. Documentation is my favorite topic, and it is the most discussed concept in auditing these days, where there are reports from NFRA, recently QRB had published their report, or FRRB had also published the report, where now we are giving utmost importance to documentation. So we will understand what all we can document in any audit, etc. Now, just giving a background on service sector in India. Now, when we talk about service industry or service sector, there are different types of services which can be provided. First service is IT and software services, which is information technology or software services, etc. Second kind of service is business process outsourcing, or KPO, which is knowledge process outsourcing, those kind of services. Another types of services are financial services. Financial services can include consulting services. It can include, for example, we know so many multinational firms are now coming into India and providing accounting services, providing payroll services, providing compliance services, so on and so forth. Another type of service is healthcare. Then there is tourism and hospitality, entertainment and media, retail and e-commerce. Now, service sector in general is a very broad concept. So what we will be doing is we will be focusing not on any individual service sector, but on an overall basis. When we are doing an audit of service sector industry, what all should be kept in mind. Again, in this, I have not covered banking and financial institution, because that, even though it comes as part of service sector industry, it becomes a separate thing in itself, banking and financial institutions. So that is not something that we are covering today. Now, when we talk about role of service sector in India, service sector contributes over 50% to India's GDP, that is the economic growth. Apart from that, it provides jobs to 30.7, more than 30% of the Indian population. That is almost one third of the population it provides jobs to. Further, service sector industry is majorly known for its foreign exchange earnings. So not only does it provide jobs and contributes to GDP, it also provides services and it exports services. So services like information technology services, BPO services, tourism, medical, etc., have generated substantial foreign exchange earnings for India. India is global outsourcing hub. India is a global outsourcing hub, particularly for IT, BPO, and knowledge-based services. Also, knowledge-based economy, it produces many high-skilled professionals, including software engineers, doctors, engineers, and business analysts. See, whenever many times when the parent entity is outside India and they are setting up a company, whenever a foreign entity is setting up a company in India, they also, apart from the Indian company doing business, etc., for the foreign company, the foreign companies also actually train the professionals in India according to whatever practices are being done abroad. Apart from that, there is e-commerce and retail growth, experienced significant growth in recent years, driven by increasing consumer spending and digital transformation. So recently, we have seen over the last 7-10 years, there has been an immense growth in e-commerce and retail. Earlier, it used to be very difficult to order something online, and then there was a lot of trust issues, this that. Today, at a click of a button, we order anything from any of the e-commerce site, be it food delivery, be it shopping, etc. And it has become so competitive as well today, like whether you go street shopping or you buy any particular clothes from an e-commerce operator or from an online shop, the price will almost be the same. Further, the service sector also has tourism and cultural exchanges. It contributes to cultural exchange and the growth of the country's reputation as a global tourist destination as well. We are seeing in recent time how government of India is also focusing on local tourism. So that is where service sector is also going to play a role in the coming future. I won't be surprised if there are a lot of companies entering into the tourism, entering into the, just like how Make My Trip or Booking.com companies are there, entering into such phases as well. Now, there are certain, even though service sector is one of the highest contributing sector to GDP, there are certain challenges which are faced by the service sector. Firstly, there is regulatory complexity. There are a lot of laws and regulations that are being faced by the service sector. Now, how does that impact us as auditors? As auditors, we have to verify the compliance with all the laws and regulations. So if there is regulatory complexity, if the entity is in a nature of business where there are a lot of regulations, as auditors, we need to be aware of those regulations so we can audit it. Second, infrastructure constraints. Inadequate infrastructure such as transportation, logistics can sometimes hinder the efficient delivery of services. Not only infrastructure constraints in regards to transportation, but sometimes even in the case of space to open up offices, etc. But now we are seeing, apart from metropolitan cities as well, there are the service sector industries are setting up different their offices in different areas in India. Then we come another challenge is skilled labor shortage. While India produces a large number of graduates and skilled professionals, there can be a disconnect between the skills possessed by the workforce and the demands of certain service sectors. So sometimes it is possible that there could be a shortage in skilled labor for service industries, which may become a little bit of a challenge in terms of to providing the services. Technology adoption. While India has made significant progress in the IT and software service sector, many other service industries lag behind in adopting technology for efficiency and competitiveness. Now, giving one very basic example, us as chartered accountants, we are also today identifying and trying to identify softwares which will help us in audit or which will help us in documentation. So technology adoption is somewhere where all the service industries, apart from the prime IT service, software services, can implement. So more often you will see even the companies such as those companies which provide accounting services, they are going to use technology for the purpose of providing accounting services, some compliance services, or as well as payroll services. Next is data privacy and security. There are concerns about data privacy and security have become more pronounced. Service providers must navigate complex data protection laws and ensure the safe handling of customer data. Now, this has become the new in thing when we talk about data privacy and security. Service sector companies generally have a lot of data of all the consumers. Again, I'll just give one, I said, we will not cover banking financial institution, but today you look at banks, financial institutions, they have a lot of data of all the consumers. So that data privacy and security is a major concern. Apart from that, when you're using WhatsApp, or when you use Facebook, or when you use Instagram or such applications, there were certain concerns about data privacy, etc. So that is where service sector industry is going to need to adapt to consumer data and comply with all the laws and regulations. Now, when we talk about future of service sector in India, it is one of the fastest growing service sectors is the IT sector, healthcare, and fintech sector, where financial technology sector is also involved. So these sectors are where there is going to be more prominence given in the future. Apart from that, we can also look at local tourism. Not only just tourism sector, even local tourism is something that will boom in the near future. Then there's going to be national e-commerce policy, which is going to be the policy on laws and regulations which will be applicable to e-commerce operators, etc. So as auditors, we will need to ensure that what will be the impact of this national e-commerce policy on the service sectors. Then in India, we are moving very digital. There is a digital transformation in India. Very simple example, 10 years ago, it was be impossible to make a payment through your phone just like that, or it will be very difficult. Today, for the smallest of the smallest amounts and for very big amounts also, we use something known as UPI or GPay. Then apart from that, cybersecurity, if we are moving on towards digital transformation, simultaneously cybersecurity comes into picture. There are going to be laws which are going to be enacted by India, and these cybersecurity and these service industries will have to comply with the cybersecurity laws. Further, there is a rise of e-learning platform. Now, when we talk about service industry, we cannot forget one of the most important service industry, which is the education industry. In recent times, we have seen there are a lot of e-learning platforms that have come up, not only in terms of and those are the e-learning platforms which are now not only for higher graduates or for post-graduation or things like that, or specialization, even for the basic, your schools, colleges, your classes, etc. They are moving on to e-learning platform. There are many classes, also CA classes for that matter, which offer e-learning, or which offer virtual learning lectures as well. So that is also going to be the upcoming future in service sector. So this was the basic background of service sector industry. Sorry, this was the basic background of service sector industries. After understanding the background for service sector industry, let us understand certain standards on audit for service sector industry. It is very clear, as we have seen the orders of NFRA, and now we know for a fact that it is very clear. If it is not documented, it is not done. It doesn't matter whether you have actually verified, whether you have not verified. If you have verified, but it is not documented, it is as good as you have not verified anything, and it is not done. So whatever we do, whatever procedures that we undertake, whatever audit evidence that we obtain, whatever meetings that we hold with the clients, with the management, those chartered governance, even if you had a meeting which is just an oral communication, the minutes of those meetings now have to be documented somewhere in your audit file. So that is the level of documentation that is now expected from us as CAs. So whenever we see anything written in standards on audit, let us check and ensure how we are going to document every procedure that we undertake. SA 300 talks about audit, planning and audit of financial statements. So let us first take up on SA 300. Planning involves establishing overall audit strategy and developing an audit plan. Now, there are a lot of benefits of planning and audit of financial statement. First, based on your planning, you will devote appropriate attention to important areas. Now, whenever we do audit of any service industry, first and foremost, we need to identify what are the important areas of service industry. Generally, one of the most important area for service industry will be its revenue and its employees. In service, unlike a manufacturing company, there is not going to be purchases or inventory or cost of goods sold, but there is going to be a lot of employee costs. So all the service industries are going to be employee heavy. So you as an auditor automatically know that you have to pay attention and focus on the employee cost as well as the revenue of the industry. Second benefit is identifying and resolving potential problems on a timely basis. The once you have devoted appropriate attention to important areas, you will automatically identify potential problems on those areas and be able to resolve them in a timely manner. It will also help properly organize and manage the audit. Also, benefit of planning is to assist the selection of engagement team members with requisite capabilities and competence. Now, CA firms may now go into, CA firms which are purely into auditing, etc. They have many clients. They can bifurcate the team members based on whoever does audits of service sector industry. Someone will be involved only in audit of service sector industry. Another team will be involved only in manufacturing industry, and so on. There could also be coordination of work done by the auditor of components and of experts. Now, in service sector industry, like we saw, one of the major item is the employees of the service of the company. Now, for employees, a lot of provision needs to be created, be it in terms of provision for actual valuation in terms of gratuity or leave compensation, etc. We will see this in detail at later stages also. But when we are doing audit of any service sector industry, we know for a fact that there is going to be actual valuation which is going to be required. So you can coordinate for that and you can plan for that in advance when you are doing before commencing the audit. Apart from that, there is also going to be impairment testing. Now, many service sector industries, when they develop software in-house or they purchase a particular software, especially when they develop software in-house, there needs to be an impairment testing done every year. One, there would be a policy by the company for depreciation, etc. of the software developed, but even above that, there needs to be impairment testing that needs to be done. So the auditor needs to engage experts to value the particular intangible asset or the value the particular software and to see what are the future economic benefits available from the software. If the future economic benefits available from the software are not greater than the carrying value, they're lower than the carrying value, then we'll have to create an impairment provision on the particular software. Planning will also assist in facilitating the direction and supervision of the engagement team members. Further, planning includes the need to consider prior to the auditor's identification of assessment of risk of material misstatement, the analytical procedures that are to be applied as risk assessment procedures. We often see that even though the auditors are applying analytical procedures, the auditors are applying the analytical procedures during the performance of the audit. One more place where auditor needs to apply analytical procedures is before, like, at the planning stage. Now, when you apply analytical procedures at the planning stage, when at the planning stage itself, you are identifying what is the variance between a particular item of balance sheet or P&L from current year to the previous year, automatically, high variance areas. Now, that helps us in identifying what are the areas where there is major deviation, where we need to focus on those areas as auditors. After we decide on applying analytical procedures, we need to obtain a general understanding of the legal and regulatory framework and how the entity is complying with the framework. See, one framework that we as auditors will always look upon is the accounting framework. That is whether it is Schedule 3 or Division 1, Division 2, Division 3, whatever is the division that is required. But apart from the accounting standard, Ind AS, whatever applicability, also obtain an understanding of the legal framework that is applicable to the entity. If the entity is in the education sector, there are certain rules and regulations which every college or institution has to follow. If the entity is into hospitality business, there are certain laws and regulations which the entity has to follow. Just like how whenever we do audit of manufacturing companies, we also obtain from them the Factories Act compliances. Why? Because every manufacturing company has to comply with Factories Act. Similarly, any service industry that we talk about has to comply with certain of their legal framework. So as auditors, we need to obtain an understanding of the legal framework before we actually go ahead with the audit. After that, we will we will determine the materiality of the particular entity, and we will involve experts wherever the experts are required. We discussed 2 examples for experts, which could be your impairment assessment and actuarial valuation. And lastly, the performance of other risk assessment procedures. So if as auditor, we want to perform other risk assessment procedures apart from analytical procedures, you can include that as part of your initial assessment of risk of material misstatement as well. Further planning says there needs to be involvement of key engagement team members, and there needs to be participation in discussion with the audit team. That will benefit of their experience and insight has to be taken. This increases the effectiveness and efficiency of planning. Again, this is not something that is applicable only to service industry, but this is applicable in general to all the industries. Before we start or before we commence any audit, when we sit for an audit planning meeting, there needs to be involvement of all the key engagement team members who are going to be involved in the audit, or who are going to be involved in managing the audit or even executing the audit. I always feel that, the engagement team who's involved at the basic level, first year, second year articles, they are in a more better position to know what is happening at the transaction level of the entity. And that is something that is very important in a service sector industry as well. So we need to take benefit of their experience and insight as well. Again, like I said, this is something that is a requirement of standard on audit. Now, if this is a requirement of standard on audit, this is something that has to be documented as well. So you will need to document that you had a meeting with the engagement team members, what was discussed in the planning meeting, and make minutes out of it. Again, SA 315 and 240 also contain requirement for discussion with the audit team that the susceptibility of the financial statements to material misstatement or to misstatement due to fraud respectively. So SA 315 and 240 contain this particular requirement discussion as well. In this slide, we can see one NFRA observation that was there. The audit firm has failed to address NFRA's observation made in the report that the firm has not complied with the requirement of para 4 of SA 300, which requires the engagement partner and the other key members to be part of the planning discussion. So there is a possibility that the audit firm may have had a planning discussion, but the audit firm had not documented the planning discussion. So that is somewhere where we as auditors need to improve, and that is something that we can take into account. Whatever meetings that we have with, whether it is an internal meeting relating to a particular audit, or whether it is a meeting with the management or those charged with governance, we need to document those the minutes of those discussions. So, like I said, we can also see out here what I've done is I've just put across certain working paper templates. Now, these working paper templates is not something that I have created. In fact, these working paper templates were given by recently in August 23 or September 23, Center for Audit Quality had come out with this full list of audit working paper templates. So this is one of the extract of the working paper templates where we can see for this particular engagement when we are understanding the entity. Here we will say what is the scope of the engagement, whether it is statutory audit, limited review, etc. Type of the entity, nature of engagement. What is the applicable financial reporting framework, including applicable legislative and regulatory requirements. So apart from the financial reporting framework, what is the other legislative and regulatory requirements which are applicable for this particular entity? We can list it down. Whatever are the applicable auditing standards and any industry specific requirements which are related to financial reporting, we will need to list it down out here. Any other terms of engagement to be considered in the audit strategy, we can list it down. So like this, we can maintain a small, either on Excel or on a Word document, we can maintain a basic documentation on initial planning of the particular entity audit. Now, this is an example of minutes of planning meeting, which was again given by CAQ itself. Your name of the client is given, statutory audit is given. This note summarizes the major point of discussion held in the meeting held at 11 a.m. on so and so, wherever it was held. Here you can write down whoever was present in the particular meeting, right from engagement partner to the team members. You can have a brief on who initiated discussion. So who initiated the discussion and what all was discussed in the particular meeting. In this, Mr. A initiated the discussion. It continues on the next slide. Be mentioned to the team the importance of professional skepticism and the need to maintain a questioning mind, setting aside any of the prior beliefs that the management is honest and has integrity. This is one key important point, where just because in the previous year we did not find any material misstatement, that does not mean that in the current year there is not going to be any material misstatement. So irrespective of what was the judgment or the prior belief of the management's integrity, etc., still the team needs to have a questioning mind and have professional skepticism. And T briefed the team on responsibilities of the engagement, which include maintaining an objective state of mind, etc., regarding independence, ethical principles, and so on. Then B also explained that that based on the meeting, we will apply the audit strategy decision in taking care of the materiality and testing plan. And C&D collectively discuss the planned audit procedures, etc. So this is how you can, minute or document the minutes of the planning meeting that you hold with your team before starting an actual audit. Okay. Sorry. So next essay that we cover is essay 315. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Firstly, it talks about what is audit risk. Basically, we need to understand audit risk is the risk that we as auditors will provide an incorrect opinion on the financial statements, where even though there is a material misstatement, we as auditors may say that there is no material misstatement. There are two components of audit risk. First is the risk of material misstatement, and second is the detection risk. Risk of material misstatement is nothing but the risk that the financial statements are materially misstated prior to the audit, whether due to error or due to fraud. Basically, whenever the management provides us a financial statement, there is always a risk that there is some particular misstatement or material misstatement present in this financial statement. That is the risk of material misstatement. To understand what is this particular risk of material misstatement, it is divided into further two parts, which is the inherent risk and control risk. Inherent risk is that risk which is present, that there are material misstatement in the financial statement before considering any controls because of inherent limitations of audit, etc. And control risk is a risk that even though entity has internal control procedures, the internal control procedures will not be able to prevent or detect any material misstatement. So that is the risk of material misstatement. Detection risk is a risk that whatever audit procedures that we as auditors will apply will not be able to prevent or detect, will not be able to detect or correct any material misstatement. Now, when we talk about audit risk overall, we understand that the risk of material misstatement is something that the auditor can identify and auditor can assess what is the risk of material misstatement. The auditor can never control the risk of material misstatement, because before starting the audit, how can you control the risk of material misstatement? There is a risk that it is materially misstated. So what we as auditors do, we conduct our audit procedures in accordance with SA 330 to reduce the detection risk to an acceptably low level. So when we reduce the detection risk to an acceptably low level, we reduce the overall audit risk as well. Therefore, it becomes extremely crucial to understand that, yes, we as auditors need to identify what is the risk of material misstatement. If I have to put it in simple words, we need to identify कहाँ पे मिस्टेक हो सकता है, कहाँ पे the financial statements can be wrong, कौन से areas में financial statements can be wrong, कौन से areas में the company can do a fraud or would want to do a fraud. So that is something that is risk of material misstatement versus detection risk. Now, same standard also gives us audit procedures. The first audit procedure is risk assessment procedures. Under the risk assessment procedures, we as auditors identify and assess the risk of material misstatement. So if you see the name of the standard is identifying and assessing the risk of material misstatement. For identifying and assessing the risk of material misstatement, we conduct risk assessment procedures. After we have identified and assessed the risk of material misstatement, we move on to the further audit procedures or other procedures. Further audit procedures are bifurcated into either test of controls or substantive procedures. In test of control, we undertake the operating effectiveness, or we evaluate the operating effectiveness of internal control. In substantive procedures, we try to identify the correctness of a particular class of transaction, account balance, or disclosure in the financial statements. Now, many points that are there out here. First, just because we as auditors undertake risk assessment procedure does not mean that is sufficient and appropriate audit evidence. Risk assessment procedure will only identify and assess the risk of material misstatement, but you will actually need to perform audit procedures in order to reduce the detection risk. So for those audit procedures, you will conduct further audit procedures. Again, in further audit procedures, there is a misconception that test of control needs to be undertaken only when there is a reporting on internal financial control required. That is not the case. The test of control needs to be undertaken irrespective of whether there is a need on reporting for internal financial controls or not, or whether reporting on internal financial controls is not applicable. Because today, whenever we perform any audit test, we are always going to select samples. So when we are selecting samples, we are saying that, okay, whatever is applicable to the sample, whatever our observations are on the sample, same observations will be there throughout the population. Now, how can we say that there is going to be same observation throughout the population if we do not know that whatever controls are put in place are being consistently followed year round? And it's not only that only for these samples the controls were followed. Therefore, it is imperative that we as auditors needs to undertake test of control. What we will be doing in this presentation is we will also understand what are the test of control that we can undertake for certain audit areas in service sector industries. In substantive procedures, we can either do test of detail, or we can perform analytical procedures, or we can do combination of both. For simple areas such as rent expense, for example, we can perform analytical procedures. For complex areas such as revenue, etc., we can perform both. We can do vouching as well of revenue to identify occurrence assertion, etc., as well as analytical procedures, which will help us give overall comfort on the particular area. There are 4 types of risk assessment procedures. That is inquiry of management, inquiry of others. Second is observation and inspection. Third is inquiry of internal audit function. And fourth is analytical procedures. So let us understand all the procedures in detail. Okay. First, we talk about inquiry of management. Now, whenever we audit any service industry, we need to inquire of the management or those charged with governance. From them, we need to understand the environment in which financial statements are prepared. When we have a conversation with management, we understand what are the pressures the management is under, what are the incentive that is there for the management to show a higher profit, etc. So we need to understand what is their perspective. Many times when we are just discussing with the client on audit per se, they just say, okay, but you tell me hum tax kaise bacha sakte hain? What can we do to save tax? So that is automatic red flag that the management may have postponed the revenue recognition, or management may have preponed the expense recognition. So that is something that we need to keep in mind when we are inquiring with the management. When we are inquiring with the employees, we need to check whether the selection and application of accounting policies is appropriate or not. Is there any opportunity or for the employee to conduct any fraud? If there is no segregation of duty, etc., it provides employees with opportunity by which they can conduct any fraud. Third, we can also inquire with the marketing personnel. With the marketing personnel, we can inquire into whether there is any changing market strategy, whether there is what is the sales trend, etc. For example, if the particular company which was providing services only physically now is providing services online as well. So what are the additional requirements that we as auditors need to be aware of? Now, if the company has entered into online advertising, for example, there are certain regulations such as equalization levy, GST on our same basis, maybe. So all those regulations, whether they have been complied with or not. Further, we will also inquire into with the in-house legal counsel to see what are the ongoing litigation, what are the compliance with laws and regulations, etc. If there is any case which is outstanding, if there is any pending litigation against the company. Now, it may not be that there might be a pending litigation only from accounts perspective, whether be taxation, etc. But there could be pending litigation, for example, infringement of copyrights or misusing the property or something like that. For that, we will really need to obtain a legal expert's opinion on whether there would be any contingent liability or an actual liability. When we perform a second risk assessment procedure is analytical procedures. Analytical procedures may identify aspects of the entity which the auditor was initially unaware. It may assist the auditor in assessing the risk of material misstatement to provide basis for designing and implementing responses to the assessed risk. Any unusual relationship or unusual transaction that we have seen, we can check that at the initial analytical procedure stage. And based on those unusual transactions, we will design our audit procedures. Something as simple as for analytical procedures in revenue, for example, if we undertake, we do one basic check: what is the total revenue divided by average number of employees of the company. So what we get average revenue per employee. Now we compare the average revenue per employee current year versus the previous year. We understand what is the variation that is present. If there is a substantial high rise or substantial low rise, substantial decrease in revenue per employee, then we can inquire with the management as to why such a change has happened. So these are the kind of analytical procedures in service industries that we generally undertake. Apart from that, we also this will also identify unusual transaction or relationships which are there. Analytical procedures on data aggregated at high level gives only broad initial indication of material misstatement. Again, when we are performing analytical procedures only at the preliminary stage, it gives us a broad indication. That is why only you cannot perform risk assessment procedures. You also need to perform further audit procedures, analytical procedures. Then observation and inspection. It may support inquiries of management and others and provide information about the entity and its environment. Example includes what are the entity's operation, documents, management, those start with governance reports and premises, etc. Your very, very basic check that we can perform in service industry. Now we know that service industries are employee heavy. Now, when we know that service industries are employee heavy, generally they take some premises on rent or they buy some premise. We can check what is the seating capacity of that particular premise and compare that with how many number of employees that are there. For example, if the company has 1,000 square feet premise or where the seating capacity is only 50, but you see in the payroll register or the wages register that employee actually has 75-80 employees, then you can directly ask the management that your seating capacity is only 50. How do you have 80 employees in your register? So these are basic checks that we can do, which will help us identify any misstatement if it is there. Another is inquiry of internal audit function. I don't want to read it, but basically, we as auditors can inquire into the internal audit function of the entity, and if they are aware of any red flags, etc., that we as auditors need to be aware, we will take it into consideration in our audit procedures. One NFRA observation was that the audit firm had not performed analytical procedures as risk assessment procedures. So we can perform analytical procedures as risk assessment procedure. It is not a difficult thing. Only thing that we need to document it now. Next, as part of the standard on audit, we also need to understand the entity in itself. First, we need to understand the industry in which the entity operates. Whether the entity operates in hospitality industry, whether the entity operates in healthcare, so in providing any healthcare services, whether the entity operates in education. For example, we've had entities who provide recruitment services. So based on the relevant industry, we have an idea of what kind of issues there could be there in revenue recognition of the particular entity. If the entity is in hospitality industry, whether the property is owned by the entity, whether the property is leased by the entity. If the property is owned by the entity, we'll need to conduct impairment assessment. If the property is leased by the entity, whether correct accounting treatment has been done by the entity, be it whether it is a finance lease or an operating lease. Once we understand the relevant industry in which the entity operates, then we need to understand the regulatory factors. So again, a hospital or any healthcare facility will have different laws and regulations applicable to that industry. Hospitality industry will have different laws and regulations applicable. After that, we need to understand what is the nature of the entity, whether the entity is a startup, whether the entity has established itself, whether the entity is on the declining phase. If the entity is a startup, generally many times the entity is making a loss compared to profit, which is very rare in service industries. But nowadays we see that a lot of startups are okay with making losses in the initial years. So whether reporting on going concern gets triggered in this case or not. What are the objectives of the entity? Now, many service industries, if they focus purely on top line, then one of their objective will be to increase the revenue of the particular industry. So we know that we as auditors have to pay more focus on the revenue. Geographies in which the entity is operating, whether the entity is operating only in India or the entity is operating outside India as well. Now, if the entity is operating outside India as well, we need to give regards to, or we need to ensure compliance with FEMA laws, FEMA regulations, etc. as well. What are the selection of entity selection and application of accounting policies, and what is the financial performance of the entity? So that is all that is something that we need to undertake in understanding the entity. I feel we as auditors always undertake checking of financial performance, but we should not only undertake checking of financial performance, we should understand the entity throughout. Like, it becomes very important initially to understand the industry and in which the entity operates, and to understand the nature of the business. Once we understand the nature of the business, there could be many issues that come up which may not be there, which we may not have identified otherwise. For example, in case of certain industries, it is possible that the particular industry, like we had one case where the entity was purchasing goods from one particular company, and the entity was providing service and delivering goods to the other entity, and there was export of services, whatever. Now, what was happening was that the entity was just a middleman, but whenever the entity was transporting goods from one entity to the other entity, the entity was showing purchases in its books of accounts, and then the entity was showing sales as the full value. Now, what that was doing, it was just inflating the profit and loss account. Now, when we did a more deeper analysis, we found out that there is no actual risk reward for the particular goods that is there with the entity. The entity is acting as a mere agent for the supplier. So that case, then the entire revenue model had to be changed, where the entity had to record revenue only of the commission or the brokerage part of it, and not the entire amount. So that is something that can come by understanding the entity in this first place. This is just a sheet where we can see that what kind of variance analysis we can undertake for at the preliminary stage. So preliminary variance analysis, what we had done, we had taken the initial balance sheet provided by the company. Based on the initial balance sheet provided by the company, we saw in which balance sheet area was there major variation. So whichever area there was a major variation, we consider as high risk, and we design our audit procedures regarding those areas as well. So in the balance sheet, in reserves and surplus also, there was a substantial change. In borrowings, there was 100% increase compared to previous year, and provisions had reduced, but materially it's not very high. So we consider borrowing also as high risk and reserves as high risk. Certain critical areas, if we talk about in variance analysis, these are the general observations that we have had over the for service sector industries. Certain critical focus areas automatically come as revenue from operations, where revenue has changed substantially from the previous year. Sometimes the entity has other income, sometimes the entity does not have other income. One of the main area or main item of other income we have seen is the scrips. SEIS scripts, Service Export Incentive Plan. The government had come out with Service Export Incentive Plan, where if a company is exporting services, the government provides script to those entities, which can be sold or which can be used for any imports, etc. So other income becomes crucial and important. And then there is employee benefit expenses. Not only employee benefit expense that is debited to profit and loss account for salary, but other than salary, also your gratuity, leave encashment, bonus, and stock options, etc. All those becomes important. Then what are the professional fees that the entity has been incurring? Now, based on the professional fees, we can identify why the entity is incurring those professional fees. Is there any case which is outstanding, and so on and so forth. Rent expenses, employee benefit obligations, property, plant, and equipment. One basic check that we perform for property, plant, and equipment, also one variance analysis, is that we see how many laptops or computers the entity has. We compare the laptops or computers with how many employees that are there in the first place. So if the number of employees has not gone up and the number of employees is same, but the number of laptops the entity has purchased is too many, so it automatically raises the question, okay, for the existing employees you have purchased new laptops, but what about the old laptops? We don't see those as deletions. So what that does is it overinflates our balance sheet, where the old laptops need to be discarded from the books of accounts. Another focus area could be your trade receivables. In trade receivables, there, if the entity is exporting trade receivables, there could be FEMA compliances. If the entity has transactions with related parties, also there could be transfer pricing audit, etc. So we need to coordinate with transfer pricing team as well. And cash and cash equivalents. Many of the established service sector industries will be heavy on cash and cash equivalents. So we need to check that what are they doing with the excess cash, how are they utilizing the excess cash, whether they're investing in fixed deposits, etc., or they're repaying as dividend, or what are they doing with the excess cash. Okay, just 1 second. Sorry. Then we come to IT general controls. IT general controls or information technology general controls are nothing but essential components of an organization's internal control, particularly for companies where reliance on information system is critical. ITGCs help ensure integrity, confidentiality, and availability of data and effectiveness of the information systems. These are nothing but controls which are designed to ensure that the information processing takes place in a reasonably controlled and consistent environment. The controls ensure high integrity of data, program, and processing, and controls that apply to more than one computerized application system. Again, IT general controls are those controls which are required on the data which the team is processing. This kind of example of these controls, if we look at, this could include user access is provided with appropriate levels. Sometimes we see that different level of transactions can be recorded by different users in an organization. So that can be one control. We also need to ensure that user access for terminated employees is removed in a timely manner. So whenever there is any resignation of an employee from an IT industry, or whenever there is resignation of employee from a particular service sector industry, the access to the system needs to be removed. Further, access to system is restricted through strict password parameters. We have seen that now in service sector industries, whatever passwords or user ID passwords that the employees are using, they have to change the password every month or every 4 weeks or something like that. So that whether that policy is there in place or not. Any unauthorized changes are restricted to the application, operating system, database, and network, etc. Changes are tested sufficiently, and system backups are taken on a regular basis and tested for successful restoration. This is one major item that we can see. Now, I believe now Companies Act has come out with this requirement that any company that is maintaining the books of accounts on an accounting software has to maintain daily backup of the books of accounts, and the backup has to be maintained on a server that is located in India. Many of these service companies we have seen, they generally have so they use software such as NetSuite or SAP, etc. We need to ensure that they take backup on a daily basis, and they take backup on a server that is located in India. Okay. Again, there are certain events and conditions that may indicate that the risk of material misstatement. If there are operations in regions that are economically unstable, for example, countries with significant currency devaluation or high inflationary economies, if in such cases the company is providing export of services, then there could be a possibility that there could be a misstatement, because we may not be able to fully rely on the financial statements. If the operations are exposed to volatile markets, or if there are operations that are subject to high degree of complex regulation, going concern liquidity issues, so on and so forth. Just couple of NFRA orders. The EP was charged with failure to perform duties with respect to unusual transaction. Example, 99.76% decline in inventory from 1617 to 1718, and provisioning of doubtful debts to the tune of 99%. So there was a decrease in provision for doubtful debts to the tune of 99.99%, and still it was not flagged out, or it did not come as a observation in the audit report. So because of that, the engagement partner was held guilty. Further, there was this one comment from NFRA. The auditor should consider, among other things, gaining an understanding of the business purpose of the transaction and examining supporting documents like agreements, contracts, etc. There is no audit evidence to support a valid reason for such huge borrowings and lending transactions. So, especially when it comes to related party transaction in service industries, we need to understand why any particular transaction, or what is the purpose of transaction that has been happening. What is the purpose of transaction? Basically. Next, we come to materiality in planning and performing an audit. I don't want to spend much time on materiality. Okay, we have 1 hour. I don't want to spend much time on materiality, but just a very brief on materiality. Any misstatement, including omission, is material if they individually or when aggregated could be expected to influence the economic decision of the users. With regards to materiality, we can understand that the concept of materiality is applied by the auditor in planning and performing the audit, in evaluating the effect of identified misstatement, uncorrected misstatement, etc. So whenever we perform an audit, we will tend to identify and verify those transactions which are material in the financial statements, individually material or material to the financial statement as a whole. So materiality is going to help us test in selecting an audit sample, etc. There was this template which had been come out, which was released by CAQ, Center for Audit Quality, on determination of materiality. So what they said, there are these fields out here, whether the entity is a new engagement, startup entity, any significant concerns in client acceptance, integrity of management, etc. There are 27 clauses. As auditors, we have to from the drop down, we have to put either it is a low risk for new engagement. For example, if it is a new engagement, we put medium risk. Startup entity, it is not a startup entity, so not applicable. So here we put either low risk, medium risk, or high risk. Automatically, we'll have to select weights from here. If it is a low risk, weight will be between 1 to 4. If it is a medium risk, weight will be between 5 to 7. And if it is high risk, weight will be 8 to 10. So we select the weightage. And from that, the template itself automatically will calculate what is the overall risk assessment. Now here, the overall risk assessment was 45%, which was a medium risk. Based on the overall risk assessment, we can check whether it was medium risk. So medium risk range is 10 to 60%. So here it was medium risk. And based on the level of risk, your materiality will vary. Generally, when we look at service sector industry, either the industry is profit oriented. If it is a profit-oriented industry, you can select your benchmark for materiality as profit before tax or normalized profit. And this is a suggested materiality range, which we generally use for service sector industries. If it is a startup or newly established entity, you can take the benchmark of turnover from revenue from operations or turnover, and suggested materiality range is provided as follows. If there is volatility in profit, even though the entity is established, but the profit is varying, there could be increase or decrease in profits, etc. We can select revenue as a benchmark, and the range is provided as follows. So this is just basically, if we want to decide or determine materiality for service sector industries, we generally take materiality or based on the profit before tax or based on turnover or revenue from operations. Frauds and common malpractices. Let us understand what are the common malpractices and frauds which have happened in the service sector industry, and it will give us an idea of what could be our focus areas in audit of service sector industries. Just one second. Sorry. One of the frauds was Satyam computer scam. All of us know about this. Through 7,500 fake invoices, only through 7,500 fake invoices, the company's revenue was overstated by 4,783 crores over a period of 5-6 years. The probe itself continued for almost 6 years and found that there were fictitious invoices which were created to show fake debtors to the tune of rupees 500 crores. Now, to tackle this particular issue, if it happens in any of the service industry that we do the audit of, now whenever we raise a sales invoice, if the other person is a registered is a GST registered person, you can maybe just on the invoice the company would mention what is the GST number of that person. On a sample basis, you can trace the GST number and to check whether it is an actual entity or whether the GST number itself is not valid. So that is a basic check that we can do to identify fictitious debtors. Another, in WorldCom scandal, WorldCom failed to accurately report line cost by capitalizing instead of expensing items. So here there is a possibility that the company, whenever there are intangible assets, generally in intangible assets, research phase expenditure has to be capitalized and development has to be expensed out, or vice versa. Here the company was capitalizing items instead of expensing them out. Therefore, it was inflating the revenue. Also, it was inflating the revenue by recording fake entries. In Enron, which happened with one of our entities, actually, Enron elected to report the entire value of each of a trade as revenue instead of only the commission received on it. The Toshiba scandal, what they had done, the scandal was directly linked to unscrupulous accounting practices such as booking future profits early, pushing back losses, etc. So now, when we see all these 3 or 4 frauds which are there out here, the one thing that is common is all of them wanted to inflate their revenue. So when we look at service industry, generally the type of fraud that is there is to inflate the revenue. So that is where our focus as auditors should automatically go on. These are certain common malpractices and certain things that we as auditor needs to be aware about. Many service industry enjoy tax holidays, concession and privileges during their initial export days, etc. So when they're exporting, so we need to recheck or recompute whatever export benefit that the industry is getting from its export. IT firms have taken advantages which are denied to others, which create a scope for fraud. Sometimes as auditors, we can also check what is the need for hiring employees. We just check, okay, what is the payroll register, verify that with books of accounts, etc. But is there an actual need of hiring employees in the first place? We can inquire into we can inquire with the management for the same. Further, we can also check billing rate to related parties. If we are providing service to related parties and if we are providing service to local parties. So many of the foreign MNCs which are incorporated in India, they provide sales services to Indian parties and sales services to related parties. Now, as auditors, we can identify what is the rate at which they are providing services to the Indian parties and what is the rate at which they are providing export services to the related parties. If the rate is different, if the export rate is lower to related parties, it is a cause for concern for 2 reasons. One, as per accounting standard 18 as per Companies Act, we have to ensure that the transactions are done at an arm's length price. Further, if there are transactions with related party which are not at arm's length and the related party is outside India, then automatically it should come to the notice of, or it should be brought to the notice of transfer pricing auditors as well. Sometimes exports are difficult to value since services are intangible. So therefore, ask the management, is there any price list available? What is the minimum pricing per hour that you charge per employee? So on and so forth. Okay. Moving on to SA 330, which is the auditor's responses to assess risk. Once we identify and assess the risk of material misstatement, then we need to perform further audit procedures to actually respond to the risk that we have assessed. These are just certain definitions that we have seen before. What we as auditors need to do is, whatever audit procedure we undertake, compare the audit procedure with the for checking that if this particular audit procedure we are undertaking, what type of assertion we are verifying for a revenue item, or what type of assertion we are verifying for an account balance at the period end. So we will see that when we do the audit procedures for major areas. Again, this is just responses to assess risk. If it is identified risk of material misstatement at the financial statement level, you will design overall responses. For identified ROM at the assertion level, you will perform test of control and test of details. This is just a basic theoretical slide for SA 330. I want to skip through this and actually undertake procedures which are there for, yes. So test of controls and substantive procedures for major audit areas. Whatever major audit areas we saw earlier, which was revenue from operation, other income, etc. Let us take up test of controls for major areas, and then we will take up substantive procedures for major audit areas. Now, when we talk about service industry, revenue from operation, first we need to understand what is the process of revenue. If it is a hotel, for example, if it's in the hospitality industry, and let's say a customer comes on 29th of March and books a stay for 3 days or 4 days. Generally, it happens that the customer is going to pay in advance for its stay for 4 days. Then how is the entity recognizing revenue? Is the entity recognizing revenue even though the customer is staying for 4 days? Is the entity bifurcating the revenue day-wise? And is the entity accounting for revenue only for 2 days up to 31st of March? Or entity is recognizing entire revenue? If the entity is in a if the auditee is a recruitment agency, for example, then we need to understand what is the moment where risk and reward is transferred for the particular service. When do we say that the service is completed? Do we have to recognize service over a period of time, or do we have to recognize the revenue at a particular point of time? Generally, so for example, one of the recruitment agency audits that we do, they recognize revenue, or the policy is to recognize revenue when the employee is hired or in the particular company. So on the appointment date, the revenue is recognized. See, there is a possibility that the entity has fulfilled its obligation and the employee is selected in the previous month. But just because employee is selected does not necessarily mean that the employee is going to start from a particular date. So here we understand the process of how revenue is recorded. Another example I'll give you, we have when we do audit of a company which provides accounting services. Now, generally, as professionals, we raise invoices or we raise bills only after the service is provided. So, for example, if the company is providing accounting services for the month of March, the invoice will generally be raised in the month of April. So there will be a need for the company to record unbilled revenue as well. Second, for revenue from operation, we can ask the management, how is the pricing defined? Is there a per hour rate, or if it is a hospital per day rate, or if it is a subscription service that we are providing, is it a per monthly rate or quarterly rate, etc. Ask the management, is there a minimum pricing criteria that is there? Who has the policy to give, who has the authority to give to the particular customers? What is the minimum price that you would be charging to customers? Does the entity have a policy of credit sales, and who accepts and approves the credit sales? Further, the segregation of duties for sale and accounting department, and appropriate authority and documentation to grant discount. Who has the authority and what is the documentation whenever discount is granted? For a couple of transactions on sample basis, you can trace the transaction right from billing to receipt, right from the time the order was received by the company to the time of receipt of funds. So that was for revenue from operations. When we come to employee benefit expenses, in test of control, understand the process of capturing new employee detail. who can actually add a new employee in the payroll register? Or is it that anyone has the authority? And what is the documentation that is created for a new employee to be added in the payroll register? Obtain HR manual to verify bonus policy, leave policy, other benefits, etc. What is the control for bonus policy, accrual of bonus, so on and so forth. Further, test the controls that the entity has set around employee benefit payment process, including maintenance of attendance records. Now, whenever there are thousands of employees in a particular service company, we can on test check basis ask for timesheet of attendance. We can ask for attendance records of those employees. In one of the entities, we had seen that every employee that is there for the full year, all the employees were paid for all the days of the entire year. So automatically it raised the question then, how is it possible that no employee has taken leave, or that no employee is utilizing its leave balance and it's getting paid throughout the year? So that is something that you can test from attendance record. Employee master, check the controls over employee master. Authorization and approval of monthly payroll processing. How does monthly payroll processing happen? Computation of employee deduction like payroll taxes. On sample basis, you can test the TDS deduction, etc. Deciding on how much bonus is to be paid to each employee, who has the authority to decide, and accrual of other benefits like gratuity, leave encashment, etc. Also, you can test the controls over timesheet of the employee. So if the company has a policy that monthly timesheets or weekly timesheets have to be filled by the employees, then you can ask for the sample timesheets to verify whether the employee was actually working or not. Sometimes we have also seen some auditors, what they do whenever there are a lot of employees, on sample basis they call the employees that is the employee actually a employee of this particular company or not. So that is like a surprise test that we can do for service sector industries. Again, we cannot do surprise inventory verification, but at least we can do a surprise call verification where we call the employees and we ask them, okay, are you employed in this particular company or not? Other expenses, including rent expense, we need to verify the controls over vendor master, who has the authority to create a new vendor in the books of accounts. Are quotations or POs received from vendors before selecting the vendor? Do we obtain quotations from multiple vendors, or do we just obtain quotation from one vendor and take the service or goods? Test whether the entity has pre-approved vendors. So does the entity already have a list of vendors which are pre-approved? What is the criteria for selection of the vendors? Like, is it always the price, or is it price plus quality, etc.? Whatever is it. Then what is the procedure for registration of new vendor? With the procedure, are we obtaining KYC details such as PAN, Aadhaar card, etc.? Is the entity also obtaining whether the particular new vendor registration, is the new vendor an MSME or it is a non-MSME vendor? What is the process for agreement, or verify the process of vetting the agreement by the internal team or the legal team? Also, what are the controls for ensuring that correct deduction of TDS, charging of GST, RCM, etc. is done properly or not? Is there a maker-checker system present? Is what happens in case of a different type of transaction expenses occurred? In that case, is the senior accountant or someone involved to decide, okay, this will be the rate of TDS, etc. And what is the process for payment of the vendor? Again, for property, plant, and equipment, it is similar. Just 1 second, sorry. Similar thing initially for property, plant, and equipment. However, what is the policy of classification of assets? So, new type of asset that is going to be there. What is the policy for classification? What is the policy of expensing out asset? Is there a policy of expensing out asset below a certain amount? So if the entity has a policy of expensing out assets below a certain amount, is the policy being followed and or not? And what is the policy for charging depreciation? Cash and cash equivalents. For cash and cash equivalents, we need to identify what are the who has the control over bank account, who has the approval to make payment. Only a single person can make the payment, or a dual, or there are two people's authorizations required to make the payment. Who has the access to bank account? And if that particular person has removed from the organization or has left the organization, is the access removed from that particular person or not? Next control is segregation of duties. Verify between the person handling cash and the person passing entries. And what is the process for review of bank reconciliation statement? So identify whether the management has in place a process for review of bank reconciliation statements. Okay, that was it from test of control perspective. Now let us understand actual when we do substantive procedures, when we do vouching, verification, analytical procedures of major areas, what all audit procedures we will undertake. For revenue from operations, one very basic or important point would be what is the point of recognition of revenue? When is the revenue supposed to be recognized? Second, when we undertake substantive procedures, obtain the agreement for revenue and understand the terms of the agreement. Don't just check the invoices. The base of the invoice comes from the agreement for service industries. So always for any service industry, verify the agreement terms. Sometimes in case of IT services, what they do is they give a particular software for on a subscription basis to the customers. So check the agreement, that is it that the software is there after the subscription basis. How do we ensure that the software is not fully transferred, or is it that the license will just get cancelled out, or what will happen? One thing that we've often noticed that many people don't verify is that you need to verify what is the actual business of the entity and verify whether it agrees with the memorandum of association, the object clause of the entity. So whatever is the purpose of setting up the entity, is the actual revenue matching with the object clause of memorandum of association. Again, in service industries as well, cutoff procedures become very important. Identify if there could be any unbilled revenue or deferred revenue. For example, like I said, in the case of accounting services provided, if this amount is billed after 31st of March for the month of March, there would be some amount that will need to be recorded as unbilled revenue. However, in case of IT industries, when we give software on license basis, if in the month of March we are raising an invoice for 3 months, that is March, April, and May, then we need to ensure that only March revenue is considered as revenue in the current period, and April and May revenue is considered as deferred revenue. In the case of export of revenue, check whether GST is chargeable or not. Even though there is an export of revenue, if the entity is just an intermediary in the GST laws, then check. Sometimes even in the case of export, GST is chargeable because the entity is just an intermediary company. If there is any transaction with related parties, ensure what is the whether it is done at arm's length basis or not done at arm's length basis. And if there is any transfer pricing audit required, obtain the transfer pricing audit report to check whether there is any whether in reality the transaction is at arm's length or not. Okay. For occurrence assertion of revenue from operation, we can do vouching of transactions to check whether the transaction has actually occurred. Also, we need to ensure whether the service is actually provided. Depending on the nature of industry in which the entity operates, whether the service is actually provided or not provided. And in case of accuracy, you can do recomputation of revenue. Whatever is the service, let's say for example, number of hours multiplied by rate per hour, you can do a recomputation. Compare the price charged on the invoice with either the price list or the agreement. Like one very basic example, we were doing audit of one of the companies who provides accounting services. In the agreement, it was mentioned that if the entity's customer has up to 25 transaction, the amount will be so much. If for example, 25,000, if the entity has transactions from 25 to 75 in that range, then the billing will be 75,000. If the transaction range from 75 to 150, it will be 150,000 per month, so on and so forth. So when since we were doing audit of that entity, we actually asked them, okay, so how many transactions have you recorded for this particular entity? And we saw that they had actually, in fact, recorded over 100 transactions for the entity, but the billing was being done only as per the 25 transaction rate. So that was one of the queries that we had highlighted and raised, where we came to know that in reality they had underbilled their customer. So that is something that you can check based on the agreement itself. If the revenue is based on a cost plus model for service company, you can recalculate the revenue from total expenses. There would be certain expenses which will be included. So you have your total expenses minus expenses which are to be excluded minus other income, and a net amount you will add the markup on it, and you arrive at the final cost plus figure. For completeness and cutoff, there should be a focus on service period. Check the correct recognition of unbilled revenue and unearned revenue, unearned in the sense deferred revenue. If there is any retainership agreement for a particular client, for a particular customer, then you can check that the revenue for all 12 months for that particular customer has been recorded. Many times we see that even in accounting or payroll services, even though it is a retainership agreement, 1 or 2 months revenue is being missed out. So you can check that, and that will become a simple variation analytical procedures which will help you. Lastly, if there is a subsequent credit note or reversal of revenue, whether it is to be reduced from revenue or a separate provision is to be created. So for example, if the service was provided in the previous year, but in the current year a credit note is issued for that particular service, then it is not necessary that you'll have to reduce that from the revenue in the current year, because the doubtfulness of receiving the funds, etc., happened subsequent to the service period or subsequent to the time when service was provided. There may be a need to create a separate provision rather than just reversing the credit note. So check whether actual reversal of credit note reversal of revenue needs to be happened, or you need to create a separate provision for the same. Substantive procedures for other income. Other income generally includes term deposits, income tax refund, etc. For that, you can obtain the term deposit statements. You can recalculate the interest from term deposit and TDS receivable. Verify that the interest and TDS receivable with form 26AS, whatever form 26AS is there. From there, you can verify the interest income, the TDS receivable, etc. Ensure correct calculation of accrued interest. You have the term deposit statement. So based on the term deposit statement, you check what is the period for which the interest, the deposit is kept, and how much period accrual till 31st March needs to be done. For income tax refund, ask the management for refund orders which have been received during the year, or any payment orders which are issued during the year. Verify appropriate accounting for refunds or payment, including reversal of advance tax for that year, reversal of provision for tax for that year. If any short excess provision has to be recorded, it has to be recorded on the face of profit and loss account. Ensure that it is not adjusted from provision for tax. One of the major areas in service industry that is our employee benefit expenses. Service companies are employee heavy. Auditors will need to perform special procedures to ensure existence of employees. Like I said, sometimes we can do a surprise verification by calling the employees and checking whether they are part of the company. Compare the payroll register with entries passed in the books of accounts. Also, we can recompute the provident fund deduction as a percentage of basic salary. So generally the employee PF deduction generally becomes 12% of the basic salary. So you can recompute that in the salary register. Ensure compliance with provident fund and profession tax laws, that the amount is being paid on a timely basis, etc. Such entities have multiple bonuses paid throughout the year. Obtain the policy of various bonus payments. So sometimes there is a policy of referral bonus. Sometimes there are sales target bonus. Some marketing companies, we've seen that marketing companies, whenever the marketing employees they receive a particular benchmark, there are some bonuses which are paid. So first we need to obtain the policy for what is the bonus payment, and then check who is actually approving the bonus. So it should not happen that the director's bonus is being approved by the director itself. Like someone else needs to approve the bonus. Many times whenever we see audit of for multinational companies, bonus may be on a calendar year basis. Therefore, what may happen is the bonus period is Jan to December. Now, the bonus for Jan to December will be paid by the entity in the month of January or next January or February, which means that the particular company needs to create a provision for bonus for the 3 months of January, February, March. So that is something that you need to ensure. What is the period for bonus payment? If the period for bonus payment is April to March, then no additional provision needs to be required on 31st March. But if it is calendar year or some other period, for example, some companies have Diwali to Diwali. So October to September is the period. So then from September, 6 months provision needs to be created for bonus. Verify new joinee details on sample basis, resignee details on sample basis. Understand what is the increment cycle and verify the increment details on sample basis. Recompute TDS for 192B. So on sample basis, you can recompute the tax deducted at source. Further, apart from this, you can do analytical procedures, revenue per employee. You can find out revenue per employee, compare that with the previous year. Other than that, you can find out salary per employee. Total salary expenses divided by total average number of employees. Compare that with the previous year to understand what is the increase or decrease. If there is an increase, then you can check that does it fit with the average increment rate that is received by the employees. Also, when we talk about employee benefit expenses, we need to understand the applicability for actual valuation on gratuity, leave compensation, etc. So before we look at this slide, let us understand a little bit of AS15. I will not take much time on it, but a little bit of AS15. There is when we talk about compensated absences, there are certain initial questions that you need to ask the management. How many leaves are provided in a year? How many of those leaves you can carry forward to the next year? If you can carry forward any to the next year, great. If you cannot carry forward to the any of the leaves to the next year, then the leaves lapse. For how many years can the leaves be carried forward? Can you encash the unutilized leaves? And how do you account for such leaves? These are the basic questions which need to be asked to the management when we talk about compensated absences. Now, when we look at compensated absences or leave entitlement or leave benefit, etc., whatever we call it, if the leave benefit, etc., are non-accumulating, when I say non-accumulating, it means if they lapse on 31st March. So if there are any leaves which at the end of the year are unutilized and they lapse on 31st of March, no provision is to be created. But if the leaves are accumulating, in the sense, whatever the number of leaves are there, are getting carried forward to the next year, whether it is a vesting, which means whether for those carry forward leaves, the employee will receive cash payment, or whether for those carry forward leaves, the employee will not receive cash payment, but just receive that additional leave balance. Irrespective, actual valuation has to be done. So there's often a misconception that, okay, but employees are not, employees are not entitled to cash, then why is an actual valuation required, or why is a provision required in the first place? AS15 clearly says that the provision is to be made for the leave entitlement. The provision is not to be made for leave encashment. So even if it is an entitlement, even if the leave is non-vesting, the cash is actually not paid, a provision will be required for leave entitlement. Let us understand. Okay. So that is something that was applicability of leave compensation. Generally, what happens whenever any data has to be sent to actuary for actuarial valuation, first and foremost, we need to understand whether actuarial valuation is applicable to all types of industries, or actuarial valuation, sometimes there might be cases where actuarial valuation is not required. One criteria we need to understand that what is an SMC. SMC is defined in the accounting standard rules. So if the entity is an SMC, criteria is different. If the entity is a non-SMC, criteria is different. An entity is an SMC if its securities are not listed in or outside India, if it is not a bank or financial institution, if its turnover in the previous year is less than 250 crore, or borrowing at any time in the previous year is less than 50 crore, and it is not a holding or subsidiary of any of the above companies, then it is an SMC company. Okay. Now, let us look at this particular table where we understand whether actual valuation is required or whenever provision is required. For short-term provision, for short-term benefits, provision is always required. However, For short-term benefits, actuarial valuation is never required because the benefits are just short-term. So for example, if the bonus is an annual cycle, so you create a short-term provision for bonus, which is paid within the next 12 months. For that, you don't need to undertake an actuarial valuation. For post-employment benefits, the criteria changes. So in the post-employment benefits, such as gratuity, if the entity is a non-SMC, along with provision, actuarial valuation is required. So let us clearly understand that if the entity is a non-SMC, actuarial valuation is compulsorily required, and you need to give detailed disclosures in the notes to accounts. If the entity is an SMC, that is a small or medium-sized company, then up to 50 employees, provision may be made on a normal arithmetic or internal calculation by the management. However, if the employees are more than 50, then the provision needs to be undertaken based on actuarial valuation. So that is something that we have found that many times what happens, employees, the management is confused whether actuarial valuation is required or not required. So it becomes imperative to understand. First, you classify whether the company is a small or medium-sized company, or companies are not a small medium-sized company. If the company is a non-SMC, actuarial valuation is required. If the company is an SMC, but the number of employees as on 31st March are only up to 50 employees, you can create a provision on some arithmetic basis. But if the number of employees exceed 50, actuarial valuation is mandatory. Similarly, for other long-term benefits such as leave encashment, etc., if it is a non-SMC, actuarial valuation is compulsory. If it is an SMC, up to 50 employees on a arithmetic basis, you can do. If there are more than 50 employees, actuarial valuation is compulsory. Okay. Many times we have also seen for actuarial valuation, it is crucial for auditors to verify the data that has been sent to the actuary for the purpose of actuarial valuation. The company or the management creates a data file, etc. That data file goes to the actuary. Based on that data file, actuary does his computation, provides us with the liability, be it current liability or non-current liability. But there is always a possibility that the data that the management has compiled is incorrect or it is incomplete. So what we do, we have to vet the data that has been sent to the actuary. From the data sent to actuary, verify the total number of employees, and that the total number of employees match with the total number of employees on 31st of March. Verify the salary from the payroll register. Verify the average age. You have the date of birth of the employees. You can just put 31st March 2024 in this financial year and just do a subtraction formula. You will get the average age for employees. Similarly, average period of service and leave data calculation. Not only that, this is just the financial data, but there are certain assumptions or certain rates that the actuary takes into account, which are provided by the management. Two such rates are attrition rate and escalation rate. Attrition rate is nothing but the leaving rate of the employees, basically number of employees left upon average number of employees. Check what is the attrition rate that the actuary has considered for the particular company. You can take a last 4 or 5 years average of attrition rate and check, does that match with the attrition rate that the actuary is considering. Sometimes we have seen that the actual attrition rate is over 50%, where 50% of the employees are leaving, whereas the actuary is considering only 10%. So then we ask the management to, or we have a conversation with the actuary and we tell them that, look, the past average is 50%. What is the basis on which you are taking attrition rate of only 10%? Similarly, verify what is the past average of escalation rate that the management is providing to the increment rate that the management is giving to its employees. If the average increment that the management is giving to its employees is only 5%, 7%, then what is the increment rate that the actuary is considering, and check the discount rate that the actuary considers. Apart from that, in employee benefit expenses, also check for policy on share-based payments or share-based compensation to employees. ESOP expenses is a ESOP sorry, granting ESOPs is the in thing for service sector companies. So even if ESOPs are granted by the parent entity, you need to create a provision the provision has to be created in the company in which the services are received. So if the employee has provided services in the Indian company, the Indian company has to provide for the expense, irrespective of whether the shares of the Indian company are to be issued or shares of the parent company are to be issued. So verify compliance with guidance on ESOP as well. We have done with this, and this. Okay. Rent expenses, again, basic checking in rent expenses you will undertake, but firstly you obtain a listing of premises taken on rent and verify whether the entity is actually working through those premises. Sometimes it is possible that there are premises but the entity is not working through the premise. Then you understand the reasoning as to why this premise is taken. Also verify the seating capacity of the premise to compare with the number of employees. So that is a basic check that we as auditors can do in service industries. For service industry, the employee are like inventory. So if you have, how we simply check for manufacturing companies, we check what is the warehouse capacity by how much inventory it can hold. Similarly, what is the seating capacity of the premise and how many employees can work in that particular premise. Compare that with how many actual number of employees are there. Professional and legal fees. In professional and legal fees, you obtain a listing of party-wise, nature-wise expenses, verify the purpose for which the legal services were obtained, consider the legal fees because based on why the entity is making payment of legal fees, based on the scrutiny of legal fees, you may identify there is some pending litigation or potential litigation on the entity for which a provision may be required. Property, plant and equipment. Property, plant and equipment is fairly simple. It is common as previous, as general property, plant and equipment checking itself. You ensure correct depreciation, vouch for addition, check that classification has been correctly done. In intangible assets, ensure that the certain expenses which are capitalized which have to be capitalized are capitalized, and expenses which have to be expensed out are actually expensed out. Also, if there are any intangible assets under development, obtain the aging schedule since how long are they under development, are they overdue or they are not overdue. Now there is an additional disclosure requirement for the same as well. Carry out an impairment assessment of property, plant and equipment and capitalize intangible assets of the entity. Trade receivables, ensure correct valuation as per AS 11. That is, if the receivables are in foreign currency. Verify existence, including completeness, by external confirmation. So sometimes what we can also perform. See, generally we take the outstanding balance as on 31st March. For certain debtors for whom we know that they are in a position to provide us with the required data, we can ask from those debtors the entire transaction for the entity whom you are auditing. So not only check the balance from the external confirmation, but you can also ensure completeness, whether all transactions are recorded from the external confirmation. Pay special focus on intercompany balances for recoverability, whether the intercompany balances are recoverable, whether any provision is required for the same, since how long are the balances outstanding, so on and so forth. This is just a slide on SA 505 external confirmation. We need to follow SA 505 while performing external confirmation procedures. Cash and cash equivalents is fairly simple. Only one thing that we can do in service companies, see, generally all the transactions happen through bank itself. So for sample months, we can take up 3 or 4 sample months and we can verify line by line the transactions in the bank statement with transactions in the books of account. What this does is it gives us additional benefit that all the transactions in the bank statement are recorded. If by chance there is any receipt of funds which has been removed by the company, that in the bank statement it will show, but in the books of accounts it may not be there. So we can verify line by line transaction for cash and cash equivalents. Taxation, again, many service companies serve its parent entity situated overseas or even domestically. Evaluate whether there is a need to involve a transfer pricing expert to provide assurance that the entities are operating at an arm's length. They understand. One thing is that we obtain the transfer pricing report and we rely on the transfer pricing report. But we as auditors are also responsible to check whether the transaction in general is at arm's length with related parties. So don't only rely on the transfer pricing report, also undertake your own internal scrutiny and verification to check that the price charged is actually at arm's length basis. And these are certain income tax related items. Okay. Procedure on foreign currency balances. I want to focus a little bit on this because many items are there on in the service industry. Many a times there are foreign currency balances present. So many service companies generally deal in foreign currency exposure through various geographies. The auditor should ensure proper reinstatement of balances as per AS 11. Auditor must verify all FIRCs to ensure actual inward remittances exist. Not only that, just 1 second, sorry. Right. Not only that, the auditor must also obtain a listing from the AD bank for open invoices on the EDPMS portal, that is the export portal of the bank. And we need to obtain the BRCs from the bank. Many times what happens is for service industries especially, they make export of services, they receive the funds, but the banker is not aware of it. So in the banker's books, they have received the funds, but there is no invoice which has gone to the banker. So from the AD Bank, obtain a list of open invoices which are there on the EDPMS portal and obtain BRCs for all the inward remittances that are received. Nowadays, we see RBI is focusing a lot on the open invoices on the EDPMS, and suddenly you see companies getting ED notices, etc., because there are a lot of open invoices on the EDPMS portal. So check that the invoice is closed on the EDPMS portal. For this, you will need to specially obtain open invoices from the bank and consider FEMA guidelines. I would also like to take up a little bit time on FEMA compliances. When we talk about FEMA compliances, whenever any multinational company is setting up a business or setting up a company in India, we need to check what sector does it come under. Does it come under prohibited sectors? Does it come under approval route, or does it come under automatic route? And check the compliances with FEMA regulations with regards to that. So whatever is the nature of business of the entity, based on nature of business of the entity, where does it fall? Does it fall under approval route or automatic route? If it is prohibited sector, then the entity will not be able to come incorporate itself into India in the first place. The onus of compliance is on the Indian investee company. So even though the foreign multinational company is setting up the company in India, the ultimate onus is of the Indian investee company, which means that we as auditors will have to ensure compliance with FEMA regulations, whether the Indian company has done compliance with FEMA regulation or not. There are various ways in which investment can be made in the Indian company, either through primary acquisition or secondary acquisition, or there is a gift or a pledge or rights issue or employee stock options, any number of ways in which the company can be set up. So here are just the basic guidelines for FEMA compliances. Whenever a company is issuing shares, whether it is a person resident in India is issuing shares to person resident outside India, then the price shall not be less than so and so price which is mentioned out here. For listed company, it should not be less it should be done as per SEBI regulation. For any unlisted company, the price at which the shares are issued should be done as per internationally accepted pricing methodology on an arm's length basis by a chartered accountant or a merchant banker. Similarly, if the shares are issued by a person resident outside India to a person resident in India, the price shall not exceed these guidelines which are given. So whenever there is a share issue or share transfer between between two entities and one entity is situated outside India, ensure FEMA compliance not only in terms of that the form is filed, etc., but ensure FEMA compliance even in terms of what is the pricing that is done. These are general forms which are there under FEMA which are required to be filed. If any company is issuing equity instruments, Form FCGPR has to be filed within 30 days from date of issue. If the entity is transferring any equity instruments, then Form FCTRS has to be filed within 60 days from date of transfer or date of receipt. If the entity is a foreign LLP, Form LLP 1 has to be filed if any Indian LLP is receiving consideration for capital contribution within 60 days of receipt. And Form ESOP has to be filed if any Indian company is issuing ESOP to any eligible person resident outside India within 30 days from the issue of ESOP. One major form which every MNC will have to file is the annual return on foreign liabilities and asset. Any Indian company which has received FDI or made any overseas direct investment has to file this form. Indian LLP has received capital contribution, they have to file this form. The due date is 15 July every year. Now, here what happens is any multinational company which is registered in India, they have to file this form, FLA form, by 15th of July every year. But many times it is possible by 15th of July, the audit is not completed. If the audit is not completed by 15th of July, in that case, they will need to file the form based on unaudited figures and later on revise the form once the audit is finalized. So many times we see that the companies do not file the form, do not update the form after the audit is finalized. But here we need to ensure that the form is updated after the audit is finalized and the figures are final. Okay. Understanding basic export of services, export and imports of goods and services. Whenever a company is exporting goods or software or services, the time frame of receipt of funds is 9 months from the date of export. So this is where for service industries, whenever we are exporting any service, we have to ensure within 9 months from the date of export, the funds are received. Yes, AD Bank has has the authority to grant extension of up to 6 months for realization of exports. But as auditors, we need to highlight this to the management. Within 6 months of export, they're supposed to receive the funds. Similarly, if we are importing any services, etc., within a period of 6 months, we have to make payment for the import. So this is something that sometimes tends to be missed out, FEMA compliance in case of export of service and import of services. Please ensure that these kind of guidelines are taken care of. And if there is a case, for example, there was this case that the entity had not complied and entity had not received the funds because it was within 9 months entity had not received the fund, and it was that the entity had made sale to its related party itself. So since the entity had made sales to the related party, until 9 months it did not receive, no provision for doubtful debts was required because the amount was recoverable, but still it is a FEMA non-compliance. So this FEMA non-compliance somewhere has to be brought out. If the quantum of non-compliance is so material that we feel that there is a material misstatement, then you need to qualify your audit opinion. If it is not material to indicate a qualified opinion, then at least you need to highlight it in the form of emphasis of matter. So when can you highlight in the form of emphasis of matter? When the entity has disclosed the particular item in the financial statements. So here the entity had disclosed the reason, etc., why the service exports were not realized within the time frame and what the management was doing to recover the funds. Accordingly, the auditor had in his report given an emphasis of matter paragraph stating that this is the case, and pending the conclusion, we are unable to comment on the possible impact on the financial statement. Our opinion is not qualified in respect of this matter. I think then there are certain other key audit considerations that we can keep in mind. What are the transactions with related parties, whether it is done at arm's length, whether it is compliant with AS 18, that is related party transaction, opt-in transfer pricing report wherever it is required, and verify the statutory compliance, just such as GST on RCM basis, TDS, etc. So in case of intercompany expenses, if the parent entity is charging any management fees, royalty, etc., ensure that GST on RCM basis is charged and TDS is appropriately deducted. Intangible valuation, like we said, consider impairment testing every year to check whether the amount is actually recoverable or not recoverable. And going concern. All right. Okay, this is just reporting on going concern and effective work papers on what to document, etc. So this just general, I wanted to highlight what all should we document in an audit work paper. You can document the audit period, timing of audit, what assertions we are verifying, what is the procedures performed, and what evidence we have obtained. And ultimately, we need to also write the conclusions that we have reached. So this is generic, not necessarily for service sector industry, but in general, I wanted to highlight in documentation. Okay. When we perform audit documentation, just ensure that there is a change from whatever is done in the last year, and whatever is done last year is not something that is just copy pasted in the current year. This is just something on a lighter note. Why did the audit trainee cross the road? Because he checked the file. That's what his senior had done last year, so he did the same thing in the current year. Let us ensure that we imbibe the policy of professional skepticism in all our team members, so that they don't blindly do audit documentation based on whatever was done last year. With this, I would like to end the slide. Thank you, everyone.
Hi, Harshvardhan. No, can you hear me?
Yes, Kulbhushan ji, I can hear you.
Yeah. There are some questions from the members and viewers and listeners. The first question is how to determine turnover for an advertising agency.
So, I mean, how to determine turnover is a very generic question. It really depends upon whatever is the nature of the agreement. See, certain advertising agencies, we have seen they charge based on slots. And when they charge based on slots, the service is still provided over a period of time. So, for example, I'm saying if an advertising agency is providing an advertising service during IPL goes on for 3 months. And in every match, if the particular company is given particular number of slots, so accordingly it will need to be bifurcated. So it depends on the terms of agreement, etc. as well. So the major focus should be to understand the terms of agreement first.
Okay, great. The second question is what are line costs?
Sorry?
What are line costs?
Line cost, expense line items. That is the line cost. Basically your repairs and maintenance, electricity expenses, rent expense, etc. Line costs.
Yeah. Third one is
I think this question was referring to one of the slides. In one of the slides, we had written that line cost, compare the line cost with what amount is capitalized. So line costs are the basic items which are expensed out in P&L.
Yeah, the third one is related to the foreign currency recharges. That is how to account for foreign currency recharges, cost or income from related parties operating globally.
When we talk about foreign currency charges, first we need to ensure that the entity has complied with accounting standard 11, that is effect of changes in foreign exchange rate. If it is whether it is a receivable or payable at the end of the year, we first check what is the foreign currency amount that is outstanding. Whatever is the foreign currency amount that is outstanding, multiply that with the closing rate, and whatever is the balancing figure, we account it as exchange gain or loss.
Okay. I hope the member will be satisfied with your answer. And the last and fourth one is please explain again employee benefits.
I spent, I think, 15 minutes on employee benefit expenses. What I can do is I can share the presentation. But
I hope, sir, I hope, sir, you have already clarified everything about employee benefit.
Yes, sir.
It was detailed in deliberation, and we will share the ICI TV link with the concerned member.
Surely.
Okay.
Yes, sir. Yes, sir. Yes, sir. We have. I hope we have certain questions with Ashok sir also.
Please, Ashok sir.
Ashok sir, please make you unmute, please.
Yeah, Harshvardhan.
Yes.
It was an excellent presentation, and it is right mind-boggling how you have prepared such a good presentation. at such a young age, but it speaks of lot of your experience. The points you have highlighted, I'll just try to cover. The services cover GDP 50% contribution, and job wise it is 30%. But there's a lot of foreign exchange earnings directly and indirectly from the services. But one of the other areas are spiritual and religious tourism, which is coming up now. So that is, we can see one thing. Major areas of cost in a service industry is the employee related cost, on which auditor needs to concentrate, and it needs detailed evaluation. But you can see one of the areas can be accounting trail. I mean, whether accounting trail is really maintained even in services industry. One of the areas you can also cover is, you can review variance analysis of trend of Indian versus global results operations versus cost and profitability, because we must see whether there is abnormality in the results of Indian operations vis-a-vis the global operations. That is what
Right.
my observation is.
Absolutely, sir. I think perfect on point. Whenever all these multinational companies are, whatever their presence is there in India, we should overall see what is the profitability that they are leaving in India, one, and what is the profitability rate that they are earning in India compared to what they are earning abroad. Absolutely, sir.
Yeah. Because there has not to be any abnormality. Indian operations versus global, or say US or Canadian or European operations. So, those, because it may reflect something on Indian operations also.
Right.
Yeah, I mean, that's what my overall comment is. And it was an excellent presentation. And it is really, for we people also, it is really something to learn with you.
Thank you, sir. Thank you so much for very kind words.
Yeah, Lal Saab?
Sir, you are having certain questions?
Yeah. Yeah, Mr. Lal, is there any question marked to me?
Yes, sir. Yes, sir. Yeah, there are certain questions now on your WhatsApp.
Oh, just hold on. Just hold on. Yeah, I will just read out the question. In a situation where the transactions with the related party is unique in nature and there are no similar transactions with unrelated parties, how do we justify that the transaction had taken place at arm's length price?
First,
Some special type of a transaction with a related party, and the same type of transactions are not with the unrelated party. So how do we verify, check, and do the justification?
Yes, sir. So, first and foremost, we will need to understand the basis or the rationale for the company entering into such kind of transaction with related party. That is first thing. When it comes to verification, the company that we are auditing may not have such a transaction with the related party, but similar companies in our industry will have a transaction with related party. We need to check those margins, and from there we can analyze the arm's length. This is something very similar to what transfer pricing auditors undertake.
Yeah. Because at times it is very difficult to do the vouching of related party transaction vis-a-vis unrelated party transactions, and especially when they are overseas. Some difficulties experienced. And then there is a next question which has come up is, for external confirmation for debtors outstanding on the 31st of March are pending, however payments were received subsequently, can we accept the same? I think it should be, in case the trend is the same, you may compare the trend of last year also. And in case it depends on the payment terms, when the items were sold or agreement was entered into. And in case it is in the natural course of business, normal course of business, definitely we can accept the subsequent receipt of payments. And
Absolutely, sir.
another question is whether unbilled revenue is to be considered as revenue or disclosed in, FS, financial statement.
Yes.
Unbilled
So
revenue.
unbilled revenue has to be disclosed in the financial statement. One very basic example could be for accounting services which are provided in March, but the billing is done in April. That does not mean the entity has earned revenue in the month of April. The entity has earned revenue in the month of March. So it has to be accrued in the month of March and be added to revenue.
No, I can add one thing. In
Yes.
case it is a normal trend for the last 2-3 years, then it is acceptable. But there should not be any managerial or management motive not to account for revenue in this year. Because you need to see the intent why this revenue was not considered in this year. Intent is very important.
Absolutely, sir. Right, sir.
That's all, Harshvardhan. And really, it is, I'm impressed at your young age. You have such a good experience and good exposure about service industry. Thank you very much.
Thank you so much.
Thank you, sir. Thank you so much. Thank you so much, Ashwardhan, sir, for such a detailed and a very, very knowledgeable deliberation. You have covered all the aspects, everything relating to the service sector. And on behalf of AASB of ICI, I extend heartiest thanks to you, sir, for sparing your valuable time, as well as acceding to our request on a very shorter notice. Apart from having various meetings as well as audit meetings, also you have given your time. And thanks to you, whenever I call you, you are just it's appreciable, sir. You never said no to me. Nahi sir, nahi ho payega is baar. Thank you so much, sir. Thank you so much on behalf of AASB of ICI. I also thanks both the moderators, Ashok ji, as well as our another moderator. Sir, I hope one more question is pop up with Kulbhushan, sir.
Yeah,
There,
sir.
sir. Sir, if you, Harshvardhan, sir, can you permit one more question, sir?
Yes, sir. Yes, sir. Definitely.
Sir, please raise that question, sir.
Yeah, Harshvardhan, this question is regarding basically the follow-up on post recharge question. That is, does the auditor needs to verify the agreements in place of its assertions? That is completeness of it.
Yes, sir. The auditor needs to verify the agreements for intercompany recharges as well. Because in the intercompany recharge agreements, you will actually obtain an understanding of what expenses are getting recharged or what items are getting recharged and charged to India. So you will need to go through the agreement for that purpose. But see, generally from the agreement, you will come to a conclusion that the management recharge or whatever recharge is charged to the India has to be charged for the full year. So for all 12 months, the charge has to be debited in the books of accounts.
So thank you.
Thank you, Ashwardhan, for such a wonderful lecture and enlightening us in the field of audit of service industry. We really appreciate your efforts, your knowledge, and your valuable time. And we also thanks AASB for conducting such a knowledgeable lecture for their members. And we are thankful to Sanjeev Singhal-ji and the whole ICAI. Over to Lalji.
Thank you so much, sir. Thank you so much for sparing your valuable time, as well as Ashok Kumar Jain, sir, very learned and very respected senior member. You have added your value as well as boosted our morale for at this juncture, sir. Thank you so much, Ashok, sir. Thank you so much, Kulbhushan Sharma, sir. And thank you so much, Harshvardhan ji. Thank you so much.
Friends, thank you very much.
Sir.
Thank you.
Sir.
Bye.